Good morning, everyone, and welcome to another great installment of the Prosperity Through Multifamily Real Estate Investing Podcast. I am your host, Real Estate Cody, and with me, as always, is the coffee connoisseur himself, Mr. Brian Alfaro. What's up, Brian? Good morning.
Good morning, Cody. It is hot outside.
It is. And I'll tell you, I struggled to get out of bed this morning. We made a round trip to Dallas last night before this recording, got back really late, and I admittedly slept through all my alarms. My daughter was late for school this morning. So off to a busy start.
All
But
good.
hey, what a excuse me, what a great way to follow up on that than to have a what a great way to follow up on that than to have a great guest here on the show. So tell us who that is.
Absolutely. I'm super excited. Oop.
Sorry, hit the wrong button. Go ahead.
All right. Today, I'm super excited to introduce Whitney Elkins-Hutten to the show. And if you don't know Whitney, she is a member of the passiveinvesting.com team. Whitney is a director of investor education at passiveinvesting.com and a partner in $700 million plus. I'm sure it's probably more than that because Dan's always buying great deals in real estate, including over 5,000 residential units, which are multifamily, mobile home parks, single family residences, and assisted living, and more than 1,400 self storage units across 8 states. You need to update this to include car washes and experience flipping over $3 million in real estate. Whitney, welcome to the show. We're excited to have you talk today a little bit about investor education and investor relations.
Thank you. Thank you. Thank you so much for having me on. And yeah, I just, yes, I need to add car washes to that. Sometimes it's hard to keep up.
Yeah, well, you guys have been growing at a tremendous pace. I mean, you're doing some very exciting things over there at passiveinvesting.com. So really fortunate to have you here on the show today, Whitney. Like we mentioned before the show, we've been followers of both Dan and yourself for some time. So it's an honor to have you here. Tell the audience a little bit more kind of about your background and how you found your way into what you're doing today.
Yeah, as Brian said, I'm the director of investor education at passiveinvesting.com. I recently held a director of investor relations role at a startup, a private equity firm, and that's where I built the bulk of my portfolio. Before that, I was in, trying to, figure out, just like everybody else, how to create financial independence and, time freedom, choice freedom, with real estate. And, my journey really starts in 2002 when I bought my first property, completely by accident. I was an accidental landlord. Bought the property with a significant other, and a few months later, the relationship fell apart. And here I had a property that had green shag carpet, walls in the wrong places, psychedelic daisies painted on the walls. I mean, a lot must have happened there in the 1960s or something. So it needed a lot of love. And I stuffed it full of roommates and, rehabbed the property. And then 11 months later, sold it for a profit. The whole entire time, I thought I had to get out from underneath it. I thought it was going to drown me. And, it turns out after I sold it, it was like, holy cow, not only did I walk away with money, put very little into it myself, but I also hadn't been paying for my bills. And that's really what kind of launched my investing career. And over the next few years, I did several more of those, what we now call like live and flipping house hack type deals. And then it dawned on me one day that if I wanted financial freedom, I needed to actually start holding the property to create stable income coming in. So my husband and I started acquiring rentals and keeping some of our flips as rentals as well. And then we hit another ceiling of achievement. We wanted to, have more flexibility to travel with our family. We had a young daughter at home. I was taking care of some family members who were ailing. And I wanted to start living off part of the income from our properties. And my husband wanted that too. And I was like, well, we're not going to get here very easily with single family rentals. Having over 30 of them, was kind of, a crushing blow to us, or my time at least, even though we had them with property management. And that's when we transitioned into multifamily real estate. And we did it both actively and passively. And, we can talk about any part of that journey, but, passive real estate really has, been the key to stabilizing the income in our portfolio, also taking advantage of generational wealth building, through growing assets. We've been getting the tax diversifications with them that so many investors seek. And it's also an amazing inflation hedge, which is very critical in today's environment.
Yeah, I love your story, Whitney, and it's amazing. I always love hearing stories about people that kind of find their way accidentally into being a landlord, only
I'm
because
familiar, right, Cody?
yeah, it sounds very familiar. As I started very similar to that, but it's really it's eye opening, right? When you go through that, and you really realize the power that real estate offers, and listening to your story about just the different you know milestones in your life that you wanted to achieve, and real estate provided those opportunities for you. It's obviously why we love doing what we're doing, right? And to your point about like being more on the passive side and what that's done for your portfolio and your lifestyle, that's kind of really our focus as far as our audience here on the show. Um, Talking to passive investors, because I think a lot of people understand real estate investing as a concept, but don't really understand the work and time commitment it takes to really scale a business, right? So you have very busy professionals, doctors, IT professionals, engineers that love the idea of real estate, but when they get into it, it really doesn't fit their lifestyle or their schedule. But you can still be a very active investor, being a passive investor. While still maintaining your W-2 and whatnot. And Brian, I know we have those conversations all the time, right?
Yeah, I'd like to chime in. We had a guest on the show recently, Anthony Vicino, who phrases really well, and I'm sure, Whitney, you can piggyback off this, but he said when he talks to somebody who's new in real estate, he asks two questions. Do you want to be a real estate investor, or do you want to build a real estate business? Because they're two very different things. And I think a lot of people want to invest in real estate, but they don't realize how much work is involved in it. So they don't realize that they're actually talking about starting a business. And some people think that they want to be in real estate business, but then they know how much work it is, how much of a team effort it requires to really get these big projects done. And they end up just realizing like, oh, I actually just want to be a real estate investor. I want to be a passive investor. Whitney, can you speak to that a little bit and some of the mindset shift that you have to understand the difference?
Yeah, there's a couple of things there. One, first, there's when we talk about the income that comes in from real estate, passive real estate. I mean, that can be single family rentals, small, multifamily, even up to the larger projects. That income is all determined to be passive by the IRS. So it's given passive income. Okay. It doesn't matter whether you're managing yourself or whether you have property management in place, it's passive. Then there's also the consideration with your time, which Brian is what you're speaking to really well, very well about is, how do you actually want to spend your time? Because just because the income by the IRS is deemed passive doesn't mean that your time is passive. And, really whenever I'm talking to investors, I phrase it like this. I'm like, what are you truly after? What is this going to afford you? What are your goals? So we really kind of, I really tried to dive deep there because, somebody might want to be using, getting into a passive deal to learn about real estate so they can then go into, syndicating themselves. Great, they're on the business side of things. And other people are like, no, I want to have like income coming in. I want, my portfolio diversified. I need the tax benefits so I can have financial independence, have location independence, have time freedom. One of those 5 freedoms in life, freedom to make an impact, freedom of choice. And, it's really that investor that it's, at the end that's seeking those freedoms. That's really they're best fit for passive investing. They need to stay there because eventually they might burn out. Like if they try to build, an active real estate portfolio. Now you have to get started somewhere, right? Not everybody has like the deep pockets, to be able to just immediately jump in and do passive investing. And for those, investors, maybe more sophisticated investors, yeah, you probably need to start building your portfolio with the single family rentals, small multifamily, maybe some small partnerships in order to, get some momentum and progress so you can access those larger deals. But for me, I'm a wholehearted believer. If you're in real estate to achieve the 5 freedoms versus building a business, once you can hit that threshold to start investing passively, do. That's really where the golden nuggets are. I know that's how how we progressed. We spent a lot of time building our single family rental portfolio, and I joked around about it because as soon as we hit our accredited status, I was like, ooh, we got some little ATMs over here. We got 30 of them so we can start harvesting the cash flow and the equity to start investing in larger deals. And that's exactly what we did. But if you don't need to do that, if you're bringing in the income already, have the net worth, if you can hit that accredited status, now today, you might want to consider just, there's no reward for starting off in single family properties. You can jump right into syndicated real estate.
Yeah, we're really glad you mentioned that, Whitney. And I know that's our message and thesis that we try to share with other investors as well. I think it's easy to wrap your head around the idea of a single family home, but when it comes to the actual management and operations and the time commitment, it definitely is much easier as you scale into the commercial space, and you can start hiring third-party property managers and teams and put systems in place that just allow you to be more of that passive investor. So, I think that's the part that a lot of people don't realize is just how much really goes into really operating this, right? So,
if you will allow me to tell a story, we were just recently on spring break in California, and I'm a planner. I thought I had my property manager all lined out. Like, hey, don't call me. I'll call you for 10 days. Like, if the house is burning down, give me a call, because we still have some of our single family rentals. And, even then, he's an amazing property manager. I've been with him for years. I still got 6 or 7, touches like throughout that time of things that I had to make a decision on. Home Depot and Lowe's are still my partner in that single family business. I was on the phone with Home Depot like through one whole drive as we're going from Yosemite back into the Bay Area. And I spent hours still on that portfolio while I was there. Now it's leveraged income. I'm happy to have it, but I have 50 syndicated investments, passive investments. Do you know how many phone calls I got? None. I got one email from one of my operators that says, hey, we're selling off 5 properties. You're making a lot of money. Do you want to do a 1031 exchange? That was like, yes. So done. So, I mean, really, if you're, valuing your time, it's a non-renewable resource. I mean, once you spend it, you can't get it back. And to me, it's a no-brainer.
Yeah, I would agree. And I will tell you, it's probably a lot more peace of mind, right, Brian, being on the passive side. I mean, we know what it takes all too well being on the operator side. So listen, I think, to your point, there's certain people that are cut out to be on the active side and be involved in like asset management. And there's a skill set for that. But, like you said, I think a lot of people, realize the hard way once they get started that, hey, maybe that isn't my skill set. Maybe that's not what I want to do. I don't want to work myself into a second job and having all of those management headaches and things that come along with that. So that's why we love passive investing and offering these direct private opportunities, to investors. That way they can still grow their wealth, still grow their portfolio, and still be involved in real estate, which we all love. So, and speaking of that, so you're the director of investor education over at passiveInvesting.com. Tell us a little bit more how you kind of evolved into that role and taking on the responsibility of providing education to, your database and your network.
Yeah, definitely. So, I spent the past few years as the director of investor relations and operations at another private equity group. And, so I've been on the capital raise side. I've been the person that's spoken to hundreds of investors a month, late nights and weekends, and while I'm traveling in order to get the deal raises complete, working with the operators in order to, manage the assets. And so I've been on the very active side of real estate. And I think, just kind of, I went into that role, one, to expand my skill set, also two, thinking that that's where I really, truly, truly wanted to be. And I do, I love it. And at the same time, I have a child at home. COVID showed I never thought in a million years that I would actually homeschool. I always kind of thought maybe I'd do it. During COVID, we were kind of put in a position where I had to homeschool our child for a little bit. Now she's just at home schooling, but we really we fell into some key life decisions where we're able to travel more and able to work location independent, able to have our child at home, so we can do these sorts of things. And that's really where I looked at how I wanted to evolve my career and my role in real estate. And I'm like, I love talking to the investor. Give me the investor all day long. Somebody else can do all the paperwork. So I really, I hold the initial conversations with the investor, educate them about what we do at passiveinvesting.com, about passive investing in general, our different verticals that we have, the multifamily, self-storage, car washes, soon to be hotels as well. And then, whenever they're ready to invest and have specific questions on a deal, that's really where our investor relations teams takes over.
Whitney, I'm curious, in all the conversations that you've had with the probably thousands of investors, from all over, all various backgrounds, you mentioned, I know in passiveinvesting.com, you guys work with mostly or all accredited investors, right? Mm-hmm. In all those conversations, what do you find is a common pain point for a lot of investors when they're reaching out to you, trying to, pursue this as an asset class? What do you, is there any common themes that you hear as far as what people are looking for?
Yeah, there's a few different buckets. I mean, number one, some people come over because they don't like the volatility of the stock market. They want to get out of the stock market. And that conversation, usually the questions are, is real estate a safe asset to invest in? They're not quite convinced. They're not sold on the idea that real estate is for them. So, we work through all the different ways that you can build wealth through real estate and how it can be, if you invest correctly and with the right operator, a good complement to their portfolio. Then, there's another camp of investors that, much like us here, that have had single family properties, small multi properties, and they want to scale. They want to fire Lowe's and Home Depot. They're done. And they want to trade up into larger projects. And so, we have a much different conversation because, in their mind, they're trying to figure out, well, how do I really make money at this? Because I've been managing the day-to-day operations on myself. Now you're asking me to invest with you as a professional operator and give up day-to-day control. So that is a very different conversation that we have, and why it's, they actually can create more leverage in their life by investing in a professional team that has the knowledge, the expertise, the network already built in. They have the ability to get credit and lending and buy assets that individually we probably never, could take down ourselves. And then also pool other investor money to access these assets. And then, of course, take advantage of the time. They can get their time back. And then the third type of investor is somebody that is probably, I would call them more the professional investor. They've evaluated private equities for a very long time. They've also, invested in the stock markets. They're very numbers laden heavy, and they're so focused on how the deal operates that I'm having to kind of pull them back out a little bit and help them understand that it's actually, they're taking the bet on the operator, and that the operator is the business. So those are really kind of the three different camps of conversations that I have.
Yeah, I appreciate you expanding on that. And Brian, I know, it sounds very familiar, right? I know we have a lot of similar conversations, and it's kind of interesting. And I joke about this because, my background is in healthcare. I'm used to being surrounded by, physicians and healthcare professionals that are, high income earners, that are highly intelligent, people in their professions, and they're very guarded as well. They protect, their earnings and their wealth so much. And it's interesting, I think about like 2 years ago, or even last year, where the stock market, equities were up 30% and everybody's living on the high, and everybody said, well, why would I do real estate if if my portfolio is up 30%? And then it crashes and they're like, hey, what's that real estate thing again? And it just, to your point about like the volatility and the risk that comes with that, and just the, lack of sleep you get sometimes, especially if you're in cryptocurrencies and equities right now to be pounded. People are looking for more stable, predictable income, things like that. So this is a great complement to their portfolio, as you mentioned. But I don't know, Brian, what do you think? What are conversations that we've had with some of our database?
Yeah, they're definitely very similar. People that are looking for, I think, a leverage of their time, also with their capital, right? Because with equities and cryptocurrency, like that's a day-to-day kind of thing. A lot of, super high net worth people might have wealth managers, but if you don't, and you're trying to manage that portfolio on your own, you're literally having to like check your phone every hour or every few hours, especially in the crypto market, because it's 24/7, 365. It never turns off. It's not like the equities market. So if you're not looking for that day-to-day sort of headache and worry, something that's that monkey on your shoulder, passive investing is a great way to alleviate that stress, because you're like you said, Whitney, so eloquently, you're betting on the jockey, right? You're not necessarily betting on the horse. We want to buy nice horses, of course, but at the end of the day, you're betting on the jockey. So betting on the people, making sure you have those relationships, and then building that trust so you can continue to invest deal after deal, project after project. That's really where you start leveraging your time, because you have that relationship with the operator, with the sponsor. So I think those are all great conversations that I'm sure we've all had, and everybody's different. So you just got to know how to approach each investor to try to make sure you understand. Whitney said is great. Their pain point. What is their pain point? What are they really trying to accomplish here? Is it diversification? Is it tax benefits? Once you sort of get to that understanding, you can have a better conversation and try to solve their problem.
Absolutely, absolutely.
Yeah, I agree. So Whitney, you've mentioned, as you're educating and nurturing these investors to really, this exposure into passive investing. And like you said, for a lot of people who are used to having control and now having to give up that control to another operator, yeah, that's an unsettling moment. But it goes back to that, as Dan mentions, right? The know, like, and trust triad, right? The triangle. What is, how are you educating, or what are you coaching your investors on, as far as how to vet sponsors? How do they, find the right people that they can trust to invest with, so that way they can get past that barrier?
Yeah, absolutely. So I would actually back that up a couple steps. One, you have to believe in real estate as an asset class, right? Before you start looking for sponsors. So really, do some due diligence, attend webinars, maybe go to a conference, talk to people that are doing this, go to meetups in your area, and really, go, understand the wealth pillars of real estate and how that this has been such a stable class for so long, for millennia, and why it, there's no indication that it won't be going forward, right? I mean, there's volatility in real estate, there's cycles in real estate, but you got to check that box first. Number two is understanding what you need from your portfolio, and there's needs and wants, right? Do you need cash flow, or do you need I would say everybody now needs to be backed by hard assets. I mean, it just blows my mind if you're investing in something that's not backed by a hard asset right now. That's the number one inflation hedge, right? Right. Warren Buffett's rule number one, don't lose money. Rule number two, see rule number one, right? So, make sure that you understand that you're investing in hard assets. Cash flow is a little bit hard to achieve right now, but definitely look for assets that still produce some element of cash flow to them, because it proves that it's stable in today's environment. Also, it gives you a bunch of different hedges so you can adjust with the volatility in any market. Then does it have some sort of equity build component to it? So that can be, if we're talking single family real estate, small multi, maybe there's a tenant pay down on the property. Definitely market appreciation. I mean, that is, something that we're seeing, take off right now. It has been for about a year and a half, and it doesn't look like it's stopping anytime soon. But really, the bread and butter and the equity build side is the three net operating income levers. The ability to raise the rents to market rent, okay, increase the income on the property, decrease expenses, and then also add additional streams of income. Now, I'm going pretty deep into this area because I would encourage any investor to pick, 2, 3, or all 4 of the wealth builders, and the fourth one being the tax benefits. Now, once you understand what you need from your portfolio, okay, as far as those wealth builders, now is the time to now go start talking to operators. And I see people kind of get this out of order. They start talking to operators and they were like, I love you, I really want to invest with you, but you don't have anything that fits my portfolio. I want a development deal. Well, we don't do development deals. At least not yet. We're looking to bring on some development car washes here in the next few months. I'm looking for, Class C properties that are 10, 12% cash on cash return. We don't do those, right? So that's where you really need to know what you need from your portfolio and the type of risk that you're willing to take on from the business plan before you go speaking to operators. Now, once you've gotten to this point and you're talking to operators, you want to be with an operator, right? That is, going back to that know, like, and trust triad, that they have a background in business, preferably a background in real estate. There's more than one operating manager in the company. Okay. Like if there's just one and they, unfortunately, something happens in their life, like, family emergency or something happens personally to them, what happens to the business? It's scary. Are they in their business full time? That is very key, at least for me, in the way I invest. I want them taking care of my money as if it's my money. And then, the conversation that you're going to have with them is, understanding their investment strategy. Does it line up with what you need? What markets are they invested in? Right now, growth markets, that is a huge hedge in any, it shores up your investing plan, right? We want to be in markets where the population's growing, incomes are growing, jobs are diversified. The tax environment of that area is favorable. If we're dealing with multifamily real estate, the landlord tenant laws in those areas are favorable. I mean, we saw that during COVID. People that were in landlord favorable areas, had choices on how they worked with their tenant, and they could individualize the plan as opposed to having to work with the tenant in one particular fashion. And then, just really trust your gut. Like, what kind of gut feeling do you get from them? What is their track record? How have they, how many deals have they done? How many have they taken full cycle? How have those exits compared to what they actually projected? Okay. And, also talk to other people that have invested with them and get, have they always made their distributions on time? Have there ever been any suspended distributions or capital calls? If so, why? You really want to dig into that information and get that from, I think, other investors is probably the best source.
Whitney, that was a very great roadmap that you just laid out. And I really appreciate you getting that granular. And Brian, this is something that's really important to highlight, because how many times do we get on calls with investors and it's a new investor, they're thinking about real estate. And I think we automatically assume that they've gone through these first 4 steps as Whitney laid out. But when you have that conversation, you realize like they haven't gone through that process map. They haven't really thought this out intently. They just heard about real estate. And so there's a lot of more kind of, like you said, kind of pulling back a little bit and doing that education component. So this is a great roadmap, Whitney. And I think this is actually something that we should probably be focusing more on when it comes to, introducing investors to the idea of, real estate. Brian, what do you think?
No, this is phenomenal. I like how she started that you have to first buy into real estate. And if you're not buying into real estate, this is a really hard conversation to have, no matter how skilled of an operator and how many units you have. Because if you're not buying real estate, you're not, you don't love everything about it and the benefits that it provides to you from a cash flow, equity upside, tax benefits, then it's going to be a hard conversation no matter whether you align with our thesis or not. But once you're past that roadmap that Whitney just laid is just phenomenal. I think understanding, the broad picture is that there's a different operator for every investor, right? Not every operator and every investor is going to align, but that's okay. It's okay, that, we align a lot with Dan's. We love the A class and the B++ assets that are in really safe and secure markets because we know there's going to be a long-term buyer, which means we're going to have lower yields than, say, a tertiary market that's going to have, a heavy lift that's going to produce that 8-9% cash on cash. Just because we don't align doesn't mean that we're a bad operator and you're a bad investor. It's just we're not married for each other. We're not meant for each other, right? But there are operators out there that are searching for those types of products. So I think doing your homework as a passive investor and finding those operators and then trying to build that relationship and building that trust long-term, so you don't have to constantly be searching for new operators. You want to ideally have, I don't know, maybe 2-3 operators that you really continue to invest with and build relationships with long-term, as long as they align with your investing thesis. Following that roadmap Whitney just laid out is going to lead to a path to success.
Yeah. I mean, really, at the end of the day, what type of control does the limited partner actually have, right? We talked about that as being kind of an objection that people have to actually investing in passive real estate, especially for that person, that investor that's coming from managing, either like they have their own business that they're running, and so they're affecting their own business, or they have their own real estate that they've been managing the day-to-day operations. You give up that day-to-day control. So what can you control passively? It's your plan, the operator, the market, and the deal that you go into. And so it's really just focusing on those 4 areas to make sure that you're pretty shored up.
Yeah, I definitely would agree with that. And, Whitney, I think the other thing too, when it comes to looking at who it is that you want to partner with as far as an operator, I think it's really important to look at, their portfolio as a whole and like, hey, what is their strategy? Like what's their core thesis? Because, I know like you guys at passiveinvesting.com, you're now adding things like car wash, but I think anybody that knows, you guys and the team there, it's very clear on what the strategy has been. It's been a straight, narrow path, focusing on core plus, no deviation. I mean, so it's very clear to understand that path of building out your business. And so I think that's important for people to realize too, especially with newer operators coming to the space. If one day they're in office, next day they're in retail, next day they're multifamily, next day it's mobile home parks, that can kind of give you a little bit of uncertainty because it's like, man, they're changing their mind every other day. And so I think it's another important point.
I mean, I've lost money passively. And that is the reason why, and it's become, because of the operator. And this is years ago, my first, couple of investments, I lost money. I didn't understand these principles. I didn't understand the operator, and they were doing exactly what you just said. They were like all over the board, no clear investing thesis. Skills can translate, across, retail versus commercial and stuff like that. But you have to put in a team. One operator cannot do all that. I mean, for us, the way we manage our verticals is that we actually have managing partners over each of the verticals. And so they stay in their lane. They're not trying to manage, like our two partners in our self-storage have nothing to do with the real estate, that side of the business. So car wash has nothing to do with multifamily. So, everybody stays very much in their lane. And so it gives a lot of, scalability to to how we can grow the company.
Sure. Gives a lot of clarity, right? You don't want people being confused as what's going on, because a confused mind will always say no. And, you want to build a foundation of trust, and that, the more clarity that you have, it definitely helps. So Whitney, let's talk a little bit about, I guess, investor sentiment today, both for you as an investor and your network. The markets are shifting, they're changing. Brian and I were talking about this last night, right? Where in a matter of just 8 weeks, the market has done a complete 180, from being a seller's market to buyer's market. And there's so many levers that are being pulled right now from the Fed. And I don't know, there's so many moving variables, but you listen to the headlines and you see a lot of like gloom and doom, right? Oh, housing bubble's coming. Oh, market's going to crash, or this or that. What are you seeing as far as investing appetite with both you personally and your network, as far as investing in today's real estate market cycle?
Yeah, I mean, if we're talking about commercial real estate, I mean, things have really kind of cycled back to how they were in 2019, especially when we look at the interest rates. So, how does the Fed, I think people need to fundamentally understand, how does the government stimulate spending in a downturn? Okay, when we have a crisis like COVID, they lower the interest rate. So, there's more borrowing going on. They pump money into the system. We're seeing the Fed try to cool that off, kind of unwind it a little bit to tamper inflation. And so really, when we talk about the interest rates, have they gone up? Yes. I think it's going to kind of cool off asset price increases, but we're still in very much, especially on the single family side, underbuilt. So I don't see, in most markets a collapse. I might see a leveling off, maybe like a 5 or 10% decline, but I don't see right now a huge tanking in real estate per se. As you said, it might just equalize a little bit more. Maybe you don't have 50 offers coming in on a property. Maybe you only have 10 or 5, right? You still can, definitely turn over real estate. The biggest problem is, especially for the single family real estate, is that the rents haven't increased along with asset prices. So investors are kind of getting cramped right now on the cash flow yield. So how are they to make money? Well, remember, there's multiple wealth pillars, right? There's the capital preservation, cash flow, appreciation, tax benefits. There's also the inflation hedge. So investors are giving up cash flow right now in order to still take advantage of 4 of the other 5 wealth building pillars. In the long term, cash flows will eventually increase. I know that for me, like when I was buying properties during COVID, they maybe made 100 or 200 bucks, depending on the size of the property. But I've been able over the past couple of years increase those rents, and now I'm making $400 or $500 a door again. So there's the time frame is a little bit longer now. That for somebody who, and investor sentiment, right? That's what we're talking about. Somebody is searching for your yield right out of the gate. That's going to be hard for them to really kind of adjust to. So really understanding that we still have a good debt instrument. We still have the 30-year fixed. It's not outrageous from a rates perspective today. That doesn't mean that it can't go outrageous on us or like climb on us. But the value right now is really in the debt and locking that in now so that your cash flow can grow over time. Now, when we talk about the commercial space, debt instruments are a little bit different on the commercial space. I know for us, we use some REIT financing. We're not using so much like the government-sponsored entity loans. Prepayments on those have been extremely high, but you still want to get good debt on these type of properties. You want the interest rate to be fixed for at least the term in the business plan, and options to lock that going, at least for a year or two after the business plan to give you some wiggle room. If it is an adjustable rate, you want to see caps put in place on those adjustable rates as well, because again, you want to be able to protect what cash flow you have. And so, we need to make sure that that debt is pretty solid.
Yeah, that's great explanation, Whitney. And I think we both agree with you as well. As look, you can't read into the public headlines. The news is all doom and gloom again, but the fundamentals of real estate are still very, very positive. And that's what I think people need to, really focus on, is really the underlying drivers of real estate. And when you look at that and you look at the facts, you look at the fact that we're not over levered when it comes to, the asset as a class, being commercial real estate. We look at the amount of liquidity that's in the marketplace. You look at the housing demand, all of these different fundamentals that are just still providing a prime opportunity for us as investors to capitalize on, and really for probably the near to longer term future. I mean, I don't really see a circumstance in the near term that really is going to make that or shift that to where we're going to be in a down cycle. So now every market's different. Understand that, every real estate market's going to be completely different. What you may be experiencing in your area may be completely different than ours. But as a whole, I think, it's just important to be very granular. And as you mentioned, multiple times already, is do your due diligence, really understand what is impacting your business decisions. And this is for as an investor as a whole, right? I mean, understanding Fed policy, understanding monetary policy, understanding fiscal policy, and how all of those different things are impacting your investment portfolio as a whole. And that's everything from equities, cryptocurrencies, real estate, all the above. And that's just being a savvy, investor. Right?
Yeah. I think, a lot of us, I mean, I know, 2008, 2006, 2008, 2011 were very real. And there's a lot of trauma that came out of that. But it's the fundamentals, as you said, are entirely different. We're not oversupplied. We don't have, we have way better debt instruments. We're not over levered. And so, a lot of this, fundamental issues have been corrected, but the fear is still there. And I get it. But that's where it goes back to investing based on principles, not so much trying to read the tea leaves.
Mm-hmm. Well, and it goes back to your point too about investing with strong operators and teams like you, Whitney, over there at passiveinvesting.com. You guys have just a phenomenal track record, a phenomenal team, just great resources for, the investor community. And, you've been through this, like you said, you've been through multiple cycles. You've kind of been through some ups and downs. You've been on both sides of the investor table, and what some of those pain points are. So, that experience is really what people can really trust and build off of when it comes to, working with people like yourself. So, definitely appreciate that for sure. Brian, what do you think here so far?
I love everything we're talking about. I think the main message is, it's not about timing the market, it's about time in the market. So Go out there, find quality operators, get educated, build those relationships with people, make sure you understand that there's a lot of buckets where you can really benefit from being a passive investor in real estate. And just because maybe one of those buckets is a little soft right now doesn't mean necessarily that you should be standing on the sidelines. Because Cody, we say this all the time, right? People that are making excuses for standing on the sidelines are always standing on the sidelines, because there's never a perfect time to enter the market. There's always an obstacle. There's always a challenge, which is why real estate can be so lucrative, is because we're problem solvers. We're always trying to figure out a way to solve problems, right? But go out there, get educated, connect with people like Whitney. And I think you'll find that there's still a lot of great opportunities out there to invest in real estate.
Yeah, 100% agree. We talked about this, right? We heard the Grant Cardone mentioned this to us. The most money you're ever going to lose in real estate are the deals that you don't buy. And if you're buying real estate and you're just waiting, if you buy right, you're going to be fine. But you got to stay active. So Whitney, this has been great. Really appreciate the great insights here. I want to kind of get an idea on what's going on, with you and the team. What's going on for this year, and tell us a little bit more about the future trajectory, at passiveinvesting.com.
Yeah, absolutely. So, we have, again, our different verticals, to help people create passive income as well as generational wealth building through hard assets like real estate. And so we have our multifamily. We're still acquiring multifamily in North and South Carolina. We just opened up the Savannah, Georgia, as well as Nashville, Tennessee. That's pretty exciting for us. We have properties in Florida as well as Texas. So it's just really that kind of whole southeastern corridor we're looking at. Self-storage wise, we invest in those same markets, and then we stack on top Colorado and Idaho. So it's super fun to get to see the team whenever they're coming out here looking at assets in Colorado. And then that's where I'm at. And then we have our car washes. So we're building a portfolio of 100 to 150 express tunnel car washes. So that's super exciting. That is not your, the car washes at the gas station, or the ones where you have to go put the quarters in and work the brush. We have a camper van. And so my husband has to go scrub it with the brush all the time. Very painful. But, express tunnel car washes, we're going to be doing a little bit of development here soon, with that, but we're looking to scale that business. And one of the unique things about that, I know other people do car washes, but it's going to be very difficult for them to scale their business. We've solved that difficulty because we are actually building a property management or car wash management company alongside that. So we're going to be solving that for these larger institutional buyers. So we're super excited about that. And then we're going to be bringing on hotels here pretty soon. I wish I had something to talk about on the hotel side.
Well, that's awesome. It's really been great to see the growth there and all the different verticals. And, again, the track record speaks for itself and the team speaks for itself. And that's why you guys are able to, be successful in these multiple verticals and offer, really a variety of, you have a menu of different verticals that will fit a variety of different investing appetites. So that's really exciting. So I know that's something that Brian and I are striving to be long-term here at Blue Oak Capital. So definitely looking forward to following in that footstep. But well, Whitney, as we near the end of the show here, we do have a few more questions to wrap up, and then we'll give you your time back. How's that sound?
Sounds perfect. Let's do it.
All right. So one thing we love to learn from all of our guests, Whitney, is what do you like to do for your continued education to further your investing?
Ooh, I'm a constant. I devour podcasts. I believe in the Tony Robbins net time, so no extra time. So every time when I'm running, that's like my meditation / university. So I'm constantly listening to podcasts or books on real estate, investing, finance, and then attending conferences. I think that's a great way to network with the amazing operators as well. It's an easy way to kind of get collectively in the room and shake hands with multiple people at one time.
Absolutely. Yeah, I know Brian and I love to be as publicly facing as we can. So it's where true relationships are formed. But so Whitney, looking back at your trajectory, was there one moment of time or one event that really changed the course of your trajectory?
Yes. And don't read into this because it came after the 2016 election. And so we're not going to talk about the election piece. What came of that, though, is my husband works with the government. And so really we saw pretty much everything was on the table, like as far as government benefit packages. And mind you, we were still flipping at that time. I think we maybe just started acquiring our first rental property, and we were kind of tire kicking. Long story short, that was the impetus. We were just like, wait a second, your life insurance and benefits and all this can go away like inside 4 years. I was like, we got to figure it out. That's it. We got to put the control back in our hands. We've got to figure it out. We don't want to be beholden to have to depend on anybody or any entity for our success.
Wow. And it's paid off for you. That's tremendous. I appreciate you sharing that. So Whitney, what advice would you give to the listeners to help them grow their businesses?
For their real estate business.
Yes, ma'am.
Oh yeah. So get educated and get started. Even if it's just like buying, investing in your first like syndication, get your education and then, pull the trigger, get invested. And I don't mean like pull the trigger like with, randomly with like without the right operator, but you have to get started. You have to get off the sideline. Getting into a syndicated investment is going to be much like, buying like single family properties. Not everyone is going to be a home run. That's not what you're looking for. You are looking for stable base hits that preserve capital, give you some cash flow, give you some solid appreciation. And you're just looking for base hits over time. Will you get the home run? Absolutely. You will, but you're not ever going to be able to predict which one it is. So give that up. Just get started.
That's great advice, Whitney. Really appreciate you sharing that. Yeah, that was great. So, well, Whitney, tell the audience how they can learn more about you and get connected with you over at passiveinvesting.com.
Yeah, absolutely. You can find me at passiveinvestingwithwhitney.com. It's a subpage on the Passive Investing website. But when you register there, you get some free goodies. You get a checklist, and eventually I'll have an ebook coming out. It's written. We're just getting it designed right now. And so you'll get that free educational pieces. You can also register for my weekly masterclass that I do to help you work through all the pieces on passive real estate. And so you'll have that. And then also you can schedule time with me there as well. And we can talk about, your goals and the open deals that we have and see if we're good fit.
Awesome. Love it. Whitney, I want to thank you again so much for tuning in with us today. I hope that people take advantage of that because it is a very great content library that you've built over there. So really appreciate your time today and all the great nuggets here. We look forward to staying connected.
Thank you.